You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. We're here to cut through the noise and really get into what's critical in global markets and geopolitics today.
That's right.
Think of this as your shortcut to understanding how currencies, commodities, trade, and international conflicts all connect. We've got a lot of ground to cover today, plenty of movement.
Absolutely. And our mission, really, is to unpack the key insights from all these sources we're looking at. It's amazing how things that seem separate are actually deeply interconnected. Yeah. And understanding those links, well, that's crucial for seeing the bigger picture. So as you listen, try to catch the why it matters behind everything we discuss.
Okay, let's unpack this then. Let's dive right into foreign exchange, starting with the big one, the U.S. dollar. Right now, it seems to be trading in a pretty range-bound state.
It's sort of stuck in a channel.
Yeah, like it's waiting for something.
And what's driving that right now is really last Friday's jobs data. It was, well, disappointing. And that data has pretty much cemented market expectations. People are now thinking, okay, September rate cut from the Fed, that seems likely.
And that expectation affects the dollar's attractiveness, doesn't it? Less yield, maybe?
Exactly. It makes the dollar a bit less appealing for yield seekers, eases that upward pressure. And this isn't just about the dollar's price, it ripples through global finance. Investors start rethinking where to put their money.
Okay, so from the dollar, let's look across the Atlantic. Europe. The euro seems relatively steady.
On the surface, yeah.
But underneath, there's this confidence vote in France today. That seems like a big deal. It's expected to, topple Prime Minister Bayrou's government?
That's the expectation, yes. And that kind of political instability in a major player like France, well, it could definitely cause some jitters across European markets. It's more than just a domestic issue.
And then there's sterling, the UK pound. It looks like it's just waiting, hovering near 1.35.
Yeah, it's playing a classic wait-and-see game. Everyone's got their eyes peeled for the UK GDP and output data that's due later this week.
So markets just pause?
Pretty much. Big data releases like that can really influence the Bank of England's next moves. So traders get cautious. They hold back until the numbers are out. It's textbook market behavior, really. Holding its breath.
Okay, now let's shift to Asia. This is where it gets really interesting, I think, with the Japanese yen. It slipped past 148 against the dollar. And this was right after that surprise announcement. Prime Minister Ishiba resigning.
Exactly. And that's the fascinating part, the contradiction. You've got the sudden political uncertainty hitting the market. Right when revised GDP figures came out showing the economy actually grew stronger than expected in Q2.
Wow. So politics is outweighing the positive economics here.
It seems so. It really highlights how much markets value stability. An unexpected leadership change can just shake confidence, even if the underlying economy looks okay. It hits the yen, impacts exports, maybe even your global investments.
And you mentioned earlier the Australian and New Zealand dollars also looked a bit weak, linked to China.
Yeah. The Aussie and Kiwi dollars, they lacked conviction. And that seems tied to weaker Chinese trade data, which kind of sets the stage for our next topic nicely.
Perfect segue. Let's move to the trade front. Always a complex area. And U.S.-China relations. Still looking stalled, particularly over fentanyl issues.
Regrettably, yes. We know Beijing's top negotiator went to Washington trying to keep the dialogue going, but sources say very little progress has been made.
And fentanyl isn't just a side issue here, is it?
Not at all. It's a major sticking point, a humanitarian crisis for the U.S. that's become a huge geopolitical lever. It's genuinely holding up the broader trade relationship, showing how non-economic factors can just derail vital talks.
But it's not all negative on the trade front. We saw this U.S.-Japan investment agreement confirmed.
That's right.
An impressive figure, $550 billion U.S. dollars, going into U.S. projects under President Trump's order. And auto tariffs might be lowered soon, too.
Yeah, on the surface, that sounds like a massive win. Big number, clear cooperation.
There's always a but, isn't there?
Well, it's important to look closer. Japan's trade negotiator quickly pointed out there are still unresolved issues. Big ones, actually. like most favored nation treatment, MFN for pharmaceuticals and semiconductors.
Ah, so equal treatment on tariffs for those key sectors.
Exactly. If that's not sorted, this big win could actually create new friction down the road. It just reminds you that trade deals are rarely ever fully done. Always needs careful management.
And sticking with trade tensions, let's quickly touch on U.S.-Europe. President Trump is threatening a Section 301 investigation, retaliation for EU fines on U.S. tech companies, calling the penalties unfair.
Yeah, and this feels like a recurring theme, doesn't it? Digital services, tech regulations, they're the new battlegrounds. A Section 301 probe is a serious tool, potentially leading to tariffs.
So calling it unfair is like step one.
Often, yes, it can be a precursor to protectionist moves. So this could easily escalate tensions between the U.S. and EU, affecting tech access and costs.
Okay, let's shift gears again. Let's talk commodities. We're seeing some interesting moves, especially in energy. Crude oil is firmer.
It is, yeah. That follows the news that OPEC+1, the big oil producer group, confirmed they'll hike production by about 137,000 barrels per day, starting in October.
Just a small hike then.
Relatively small, yes. 8 member states agreed, and they framed it as a, quote, cautious adjustment given healthy market fundamentals and steady demand.
But there's some disagreement within the group.
Well, different perspectives, maybe. Russia's energy minister says compliance is strong, markets are balanced, but Saudi Arabia is reportedly pushing to speed up the pace of these increases.
So Russia wants stability, Saudi Arabia wants more volume, maybe?
That could be part of it. It signals some internal tension about strategy, short-term revenue versus long-term stability. And that internal dynamic could actually lead to more price swings later on, affecting us all at the pump and beyond.
And meanwhile, individual countries are making moves too, like Iraq signing new energy partnerships.
Exactly. They've got new agreements with Oman on oil storage and trading, and they're in talks with ExxonMobil about major projects.
So they're shoring up their own position.
Yeah, it shows nations like Iraq are actively working to secure their energy future, diversifying partnerships in this constantly changing market. These aren't just random deals, they're strategic.
Got it. And briefly, Italy isn't shutting down coal plants this year, and Europe's gas storage looks okay.
That's the report, yes. Storage levels are comfortable across Europe for now, provides a bit of an energy security cushion.
Okay, what about precious metals? Gold's holding steady, above $3,540 an ounce.
Yeah, gold's stability seems directly linked to those Fed rate cut expectations we talked about earlier.
Makes sense. Lower rates make non-yielding gold more attractive.
Right. Plus, ongoing central bank buying, especially China, adds support. They're diversifying reserves amid all this global uncertainty.
And copper, often seen as a health indicator for the global economy.
Copper's trying to recover, but it's still under pressure. And guess why?
Let me guess. That weaker Chinese trade data again.
Bingo. It keeps coming back, doesn't it? It just underlines China's huge influence on demand for industrial metals. When China slows, copper feels it, signaling potential weakness in global manufacturing and construction.
Okay, let's pivot now to, well, the really intense stuff, geopolitics. The Middle East remains incredibly tense.
Tragically so.
U.S. President Trump issued a very stark warning to Hamas, calling this their last chance to accept a hostage deal.
Yeah, very strong words. And Hamas has confirmed they received proposals via mediators. Meanwhile, Israel's foreign minister repeated their stance. The war could end immediately if hostages are released and Hamas disarms.
So the conditions are clear, but bridging that gap seems immensely difficult.
It does. The urgency is palpable, but the path forward is fraught. Every statement feels like it's on a knife edge.
And adding to the instability, Yemen's Houthis claimed a drone strike on an airport in Israel, Ramon Airport.
That's right. They claimed responsibility, and it did briefly disrupt operations there. It's another example of how these regional actions contribute to the overall tension and can have direct, if temporary, impacts.
Let's move to the Ukraine conflict. It sounds like it's intensified significantly.
It really has. Russia launched a large-scale overnight barrage, drones, and missiles.
And Ukraine struck back, hit the Druzhba oil pipeline in Russia.
Yes, in Bryansk. And maybe most significantly, Kyiv reported that their main government building was damaged in a strike. They said it's the first time that's happened in the war.
That's a grim milestone.
It really is. Meanwhile, Moscow is making counterclaims of new territorial gains. And they keep insisting that foreign military guarantees for Ukraine are unacceptable. It just paints a picture of escalating conflict, really.
And what about the diplomatic signals? President Trump says Washington is prepping more sanctions on Russia and thinks the war will be settled soon.
He did say that. But contrast that with Western envoys on the ground. They look at Russia's latest strikes and say they see absolutely no sign Moscow actually intends to pursue diplomacy right now.
So completely conflicting signals. Makes it hard to know what to believe.
Incredibly difficult. It just highlights the complexity and the competing narratives surrounding this devastating war.
Okay, just a couple more points on the geopolitical map. Tensions rising in Turkey. Police surrounding an opposition party HQ.
Yes, in Istanbul. That followed a court ruling that ousted the party's local leadership. So, internal political friction there.
And in Asia, North Korea's Kim Jong-un met with China's President Xi.
He did, returned from a summit where they apparently pledged to deepen their strategic cooperation.
Which has wider implications, obviously.
Absolutely. These things, whether it's internal politics and Turkey potentially spilling over, or shifting alliances like North Korea and China getting closer, they're all connected. That deepening cooperation between Pyongyang and Beijing, for instance, really matters for the power balance in Asia and globally, especially with existing rivalries. It's all part of this big interconnected puzzle.
So after covering all that ground currencies, trade, commodities, conflicts, what does this all mean for you, our listener, trying to make sense of this world?
I think the biggest takeaway really is just how deeply interconnected everything is. Financial markets and geopolitical events, they don't exist in separate boxes.
Right, like how currency moves reflect political stability or maybe instability.
Exactly. Or how commodity prices aren't just about supply and demand, they reflect conflict, strategy, all sorts. And trade disputes, well, they can flare up fast and hit everything from car prices to medicines.
So the goal is to look beyond the headlines. See the links.
Precisely. To understand the why it matters behind the news, grasping that cause and effect, that's where the real insight lies, I think.
Yeah. So maybe as you go about your day, think about how one of these seemingly smaller things we discussed, like, say, leadership changes in France or Japan, how might that quietly ripple outwards and influence a much bigger global trend?
Or how that persistent weak data out of China might, over time, fundamentally reshape the supply chains we all depend on.
Yeah.
And maybe a final thought to leave you with. Looking at all these ongoing tensions in trade, energy, security, which one do you think might be the next flashpoint? The one that could really redraw the economic or political map? Understanding these threads now, how they intertwine, that really helps you anticipate what might be coming around the corner. It gives you an edge in navigating this very rapidly changing world we live in.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.